It's a genuine smackdown, an ultimate Fight Club match. A total 2 go in, 1 comes out. Mad Max and Thunderdome free for all. I'm talking about coal and the companies that help mine it, particularly for the red-hot Chinese market, versus President Obama with his anti-coal, anti-greenhouse, silent but deadly pro-Don Quixote cap-and-trade plans. The company representing coal tonight in the arena is Joy Global, which reported a darn good quarter this morning, considering the worldwide slowdown and the political witch hunt against this fuel. Of course, they do other things just besides coal. Now, this is a witch hunt, by the way, what I actually would favor if it were done in stages over many years and not overnight in true Rush, not Limbaugh, to judgment Obama fashion. Joy Global is perhaps the least Obama-resistant business in the country, save Peabody and Arch Coal, and, of course, any bank that has a malefactor of wealth who has threatened the American way by issuing loans and making money. Joy Global reported first quarter earnings of 83 cents a share this morning. It beat the street's consensus by 7 cents. Take that, Obama. This company that makes dirty, filthy equipment for mining coal and wrecking the environment is doing pretty well. The company reaffirmed its guidance for 2009, which was also ahead of the street's expectations. Joy Global is now a $1.8 billion company with a $2.96 billion backlog. At these levels, I have a hard time seeing how this company will stay independent if there's ever going to be a merger or an acquisition ever again. The stock's been knocked down, get this, from $90 to $17.55, and now has a notoriously BIG juicy, accidentally high yield of just about 4%. But Joy Global also had $161 million of cancellations, mostly coming from Central Appalachian Coal and North American iron ore companies, and we can probably expect even more cancellations in America if Obama gets his way. Good thing the Chinese communists know a thing or two about capitalism and still need coal and still need to mine it. Who will ultimately triumph, Joy Global and the forces of wealth creation, or Obama's wealth-destroying agenda? You don't need to pay-per-view to learn. You just need Cramer. Let's talk to Joy Global CEO Mike Sutherland, who's always told the truth. He's been a fabulous CEO, had a great quarter. Mr. Sutherland, welcome back to Mad Money.
Thank you, Jim. Good to be here.
All right, I loved your call today. I loved it because you're talking about a stimulus plan that's putting people to work, that's causing commodities to go higher, that is genuinely reigniting economy. But it's the Chinese economy, isn't it?
It exactly is. Absolutely. The Chinese have, they're committed to keeping their economy moving forward. They're making all the right moves at the right time, and they're really serious about continuing to grow the Chinese economy. And it is paying off. We're seeing, copper imports go up. We're seeing iron ore stockpiles begin to diminish as the consumption increases, and steel production is coming back online in China. So some very good early signs coming on in China right now.
Now, you're also getting, I think you're getting some strong margins in your surface mining. Right now, everyone else is telling me they're all moaning, oh, my margins are getting killed. I'm not making as much money per sales. You're not seeing that, are you?
Well, no, we're not. Margins have been very good, and under current conditions, we don't see the high growth rates here for the next couple of years. So we've turned our focus to bottom line, and we're working cost controls, we're working efficiencies, and that's really beginning to pay off on bottom line performance. So the top line is continuing to grow, but at lower rates than we have over the last 4 or 5 years. But the bottom line is beginning to show some real signs of strength.
You did something I thought was pretty interesting in the call. You have a chance to make people take their equipment. You've got non-cancellation clauses. But you did something remarkable. You let some customers out of them, didn't you?
We did. We sell to customers that are, very capital-intensive customers. They're around the world. We only have a few hundred customers. They're all repeat customers. Long-term relationships and trust is very important in this industry. And at the end of the day, we felt that we didn't want to be taken advantage of, but we also didn't feel that taking advantage of our customer was in the long-term best interest of our business.
Do you think that some of them who've canceled are just deferring and can come back in 2011-12?
Well, yeah, certainly. The capital intensity of this business doesn't allow companies to move in and out quickly. So as markets, some of the North American producers are tied into North American demand, and as that market comes back, they'll benefit from that, and they'll be back in production and we'll benefit from the way we handle the cancellations at this
All right,
point.
let's focus, circle back to China. You said in your call, we continue to make strategic investments in China. The P&H Gear and Components factory in the, I'm going to mispronounce this, Tianjin campus is in ramp-up phase. You're ramping up actual new factories in China. You're not able to do that in America, obviously. You must expect a considerable boom coming down the pike to be ramping up production in China.
Well, we have our China strategy is based around serving the China market, which has just a tremendous amount of upside. China today produces 2.5 times the volume of coal that the U.S. produces, and we still participate at the very top end of that with quite a bit of opportunity in lower tier companies in that market. But we build manufacturing to serve our global markets, and we expect to be building machines in China that we're going to use to ship to customers in Australia and Chile and other markets around the world. So it's not just a China domestic factory there. It's a global factory that supports China as well as other regions around the world. And we are ramping that up because we see the very significant cost advantages. We also are seeing the benefit of having access to local suppliers in China and being able to take advantage of those as well.
One last question. Did you shudder when you saw the aggressive nature of Obama's cap-and-trade plan and perhaps realize, like I do, that it might be unrealistic right now without causing the people who actually use utilities a fortune?
We look at two things that give me a great amount of comfort. One is that 80% of the power plants that are going to be built in the world over the next 20 years are going to be built in the emerging markets, and they're going to use coal because that's their local indigenous fuel supply. Secondly, if we look at Europe, Europe today has twice as many coal-fired plants in the planning phase than the U.S. does because they understand the importance of surety of supply, not just everybody wants to get cleaner and greener, and we support all that.
But
at the same time, you got to have electricity to meet the demand of the consuming public and economic growth. And Europe understands that they've got to have more coal-fired plants to be able to do that. And the U.S. has not quite got that far along yet.
Nice to see some realism in our trading partners who often are described as tree huggers. Mr. Mike Sutherland, Joy Global CEO, thank you so much for coming back to Mad Money.
Okay, thank you, Jim.
Down from 90 to 17. Do you believe that the world is going to get away from coal the way President Obama wants to? I say no. I say thumbs up, Joy Global. This man's delivering. He's giving his customers a little forbearance. That's how you build a long-term tradition with a 4% yield. Stay with Joy Global. Stay with Mad Money.